housing inventory just went over an important metric, 5 months of inventory. So we are going to look and see if this rising inventory is going to have a big impact. We're finally going to get these, big slashes in prices or median home price across the nation or here in Florida. And what will that do to the housing market over the next year or two as inventory goes up and we look at rates in the market in general? Hey everyone, this is Rayce Robinson, your favorite Florida mortgage broker. And these are your real estate numbers that are for October, really cover to the end of September. I'm going to look at the numbers and then I'm going to give you my thoughts on what I would do this both as a homeowner or if you're a home buyer and what you're likely to see throughout this year and next year. So let's jump into the numbers here. So I highlighted the numbers I really like to look at, both year over year, month to month changes. So total housing inventory sitting at 11,560, 6,758 this time last year. So that's a 71% increase. Month over month, really kind of staying flat, right? 11,511 last month, 11,560 this month. New listings, which we're also going to look at because there's really not a lot of new listings coming on the market. And there is a lot of inventory out there locked up with really sellers or homeowners that have really, really low rates that just don't want to get rid of those payments, but may need to move, but are not going to because the payments are going to be higher. And from last month to this month, you can see total listings have fallen. Now, a lot of this is, is adjusted by the time of the year and things like that. But it is good to look at just kind of month over month, year over year. Median price still going up on a year over year basis. From last month, it's down 1.2%. Again, that's seasonally adjusted, so not a big change. And then months of supply at 5.14 from 2.64. That's almost 100% increase. And from last month, went up from 4.34, breaking this 5 months of inventory. And then just kind of the health of the market, we'll look at foreclosures here. So 17 distressed home sales, that's up 54% from August. We're 11, but again, not a factor. There's just really no distressed home sales in our market inventory. Our market distressed sales are going up nationally, but remember, we're coming off the bottom, so none of that is a surprise. I don't think we're in any type of issue where people are just running out of equity, doing short sales, throwing their homes out there. That's just not happening. And then when we look at the total breakdown for the ending September, the average rate was 5.89%. We're going to look at that. Total inventory 11,560. I do like to look at the breakdown. 8,078 of those single family homes, 2,217 condos, 1,265 townhomes. So again, the bulk of the inventory made up obviously of single family homes. And then the other big numbers to me, sales. Look, we fell from 2655 to 2249. And even if we look at this time last year, our sales are down at 2558. The rate then was 7.29%. Now the rate's lower, and sales have not really jumped all that much, which is interesting. And then we look at days on market, going from 41 all the way last year at this time up to 58, which means that we are obviously getting growing inventory, and demand has steadily been decreasing a lot because rates were higher. Right now, I think you have buyers that are kind of waiting on the sideline, hoping rates will continue to fall. So we'll look at that. I think that's really buffering, creating lower sales. And at the same time, we're going into really a slower time of the year, especially nationally. And let's see, mortgage rates, you can see kind of this small downward trend, and it's been kind of down and then up and then down and then up. So we'll look at kind of a chart on rates. And then last, months of supply. And months of supply is the approximate number of months to deplete the inventory based on current sales. So with sales falling, that is one of the reasons inventory is up, right? At the same time, housing supply is increasing a little bit, and we're at this 5.14 months of inventory. So those are the numbers that cover till the end of September. Those are October numbers covering the end of September. And I was trying to think about, if I was a homeowner or home buyer watching this video, what would I want to be thinking about? What's the opportunity? Should I be selling? Should I be buying? Should I be waiting? So I went to ChatGPT and I asked it, where else would we go these days? When looking at housing supply, looking at months of inventory, break down what is an extreme seller's market, buyer's market, extreme buyer's market, and where are we at in market correction territory. And it broke this kind of breakdown I thought was interesting. 0 to 2 months of inventory, which we did have for a while. That was an extreme seller's market. They're saying 2 to 4 months of inventory. Kind of still a seller's market, depending on whether it's 2 or 4. 4 to 6 is this all elusive Goldilocks balance market, right, where it tends to be balanced. Buyer's market, 6 to 7 months of inventory. Extreme buyer's market, 7+ months of inventory. And they actually say you can get a market correction anywhere from 6 to 12 months of inventory. And that's because the trend matters to me more important than what the months of supply is. So the trend obviously now is getting more and more supply. And I think that kind of outweighs this 4 to 6 months. So I would say I'm noticing it's definitely more in buyers' favor as far as the terms are getting, not so much price. When a seller prices their home right, they're selling very quickly, but you're not able to, as a seller, to get wish pricing. And so we're seeing this kind of leveling off. Now remember, in the Great Recession, 2008, we had 25, 30 months of inventory, so we are a long way from there, which is why I just don't see a market correction happen anytime soon. But when we look at the actual housing inventory, this is the active listing count. It has increased, so you can see, but you can see how high we've been in 2016 and 17 with over 1.4 million. Now we're currently, as far as active inventory goes, sitting at 940,000, and we did not have any type of major price correction even back in 2016. So we are a long way off of there. I like to show that every time just because I think a lot of times people are waiting for the wrong things, waiting for lower rates we'll talk about because I think that's likely to happen, but waiting for prices to go down based on the amount of supply versus demand is just not going to happen. At least don't get your financial advice from me. My crystal ball is broken. But if you have supply going up but starting to level off a little bit, and you have rates coming down and demand picking up, those things are going to intersect and start to create a flatter market. At some point, with low enough rates, if say rates were 0%, right, everybody would try to buy a home. So that's the supply and demand, why those things level each off. And looking at rates, so this is Mortgage News Daily. Everybody's rate is different based on points, credit score, how much you're willing to put down, so many factors. But this is an average, 6.62%. I care more about the trend. And after the Fed cut the Fed funds rate, and then we got the unemployment numbers, rates have shot back up. And so you just can't predict in time the real estate market based on interest rates. And then let's look at the Florida housing market since we're looking at supply, months of supply. You can see that we're up to this 200,000, which is, we're kind of back to what they call pre-pandemic levels. But again, we just don't have a major amount of supply where you're going to see major price correction. So what would I do this information if I was a buyer, if I owned a home? Well, if I owned a home, it's simple. There's really no reason to rush out and sell your home. But if you were thinking of selling, as rates fall, it's just a fact. As rates fall, like again, if rates are 0%, demand's going to be through the roof. Our rate's going to fall to super, super low rates right now. A lot of people thinking rates are going to be in that 5.5% to 6% range by the end of next year. I've done other videos on this. There's just no way to know. But as those rates tick down, making payments more affordable, that will push more people in the market. So if you're a seller, you're not going to get, you're not going to have to discount your price majorly. You may have to wait longer for a buyer, and you may have to offer good terms, paying closing costs and things like that, but you will be able to sell your house. The benefit of that is it's always a double-edged sword, because if you're selling and buying, that makes you a really strong buyer with a big down payment for most people, and you're in a market where it is more friendly to buyers than it's been in a long, long time. So that would be the reason, not so much price corrections and things like that, because when you're selling a house to move up, then you have more opportunity to buy a house, and as rates fall, you can refinance down the road. And this would go back to anyone that's going to be a buyer, whether you're a move-up buyer or buying now. As rates fall, it's going to get more, more demand out there. Do I think houses are going to be flying off like they were, when rates are 2 or 3%? No, but it gets frustrating when you find that house that you really, really like, and you're like, why are the houses that I really, really like still have multiple offers? Because those houses, as rates fall, are going to get more competitive. So if you're like waiting for a lower payment, you can always refinance. I like the ability to go out, look at a house, and have more options and find a house that you really like. So that's the data as of right now. We are going to keep tracking this months of inventory. We're at 5. We'll see if we get to 6. Rates are up a little now, but I think you'll see that start to fall again as the year goes on. I think you're really going to see inventory level out, especially after the first of the year, get into the spring. As that demand increases, supply tends to level out. Obviously, that's going to lower months of supply. If you're a seller, no reason to wait. You're not going to get priced out of the market either way. You're not going to take a big discount. but you're also going to have more opportunities when you buy. That's my opinion. I'm data driven, so we're just going to look at the data, let that decide kind of where things are headed right now. We're definitely headed into a balanced market, going more towards a buyer's market. We'll see if we get over the 6 months of inventory. There are so many programs right now, from bond programs to special programs. If you're a buyer and you're not taking advantage of this market, it's a big mistake because there is opportunity out there. If you have any questions on this, need to get pre-approved, or just in general, reach out to me. I'd love to help. As more information becomes available that moves the market, I'm going to cover it right here. Have a great day, great week, great month, and I'll talk to you soon.